I was in the chat rooms this morning, and a lot of people were looking at Intercept Pharmaceuticals, especially the day traders, and they were having a lot of fun with it today. I don't typically do a lot of day trading, but I was just watching the message traffic and decided to take a look at it. A couple of the swing traders had asked, if this was a good opportunity to go long. So I wanted to do a quick video about it. I talked about it some in the chat room earlier, but I wanted to do a video and let you know what I thought and where I thought it would be a good buy. Obviously, if you've looked through any of my videos and how I use my indicators, you'll know that I would tell you it's not a good buy right now. Just looking at the Bollinger Band indicator, you can see it, it's gapped up and it's hit a 3 ATR band already. I would expect a pullback from here. Yes, it could continue to, because this is a pharmaceutical stock, it could continue to act a little strange. They can be a lot harder to swing trade because of news events. So you have to be very careful when you're trading pharmaceuticals. It's a little bit different animal from just your standard Microsoft, Apple, or something like that because of how volatile they can be with news events. But just, we'll run through the indicators real fast just to give you an idea of what I see from a swing trade standpoint and what I think Intercept Pharmaceuticals is more likely to do from here. Keep in mind, this is news driven, so it can act a little strange in technical analysis. Doesn't always work as well on news driven stocks, but it can keep you out of a bad trade. And that's what really my key is staying out of the bad trades. And if you're at a 2 or 3 ATR Bollinger Band, that's a bad entry. So I'm not looking for an entry here. Let's take a look at the wave. The wave obviously is going to show us the same thing, but you can really see how extended it is from this wave. The wave's also very steep, which is a little concerning because you've worried about momentum running out. And you look at your RSI indicator, yes, it's been pushing higher, but this is a high risk zone in order to try to get long. When you're looking at this overbought, yes, it did work. However, I'm about probabilities, and probabilities tell me that it can't continue this. Now, again, news driven, so it acts a little different on technical analysis than a regular stock would. Let's take a look at the moving averages, and obviously you're seeing the same thing. This very steep line. You're seeing this gap starting to grow. It's going to be pretty substantial right here. I would much rather buy when I've got a close gap like here. It's a better time to buy. So let's look and see if we can find where, based on this candle, would be a pretty good buy entry. We're going to use a tool that I haven't used with you yet, and that is Fibonacci retracements. And I just want to get an idea of actually that's the line. Hold on just a second. This right here would be the 127% retracement back down to here. Obviously, this would be probably a perfect buy area, but it's not going to get here. And in fact, if it had come back down here, I would say that this has been broken and we wouldn't go long. But it could be used later, for your stops. I actually had this set up for some other strategies I was using. So let me change these properties on this Fibonacci to show me the levels that I'm really looking for, which would be I tend to look at the 50, the 68, the 78% retracements. So let's go ahead and turn those on. So this gives you an idea, based on Fibonacci, of potential buy areas. You're going to want, if you're using strictly this candle, it looks like this candle right now may continue up, and if it does, these numbers will change. So if you're looking at this on your stocks, make sure that you update that, and if it continues up tomorrow, the next day, you would need to do your own Fibonacci run as well, so that you can see how this is really going to play out. So as we look at it from the moving average standpoint, we would want to see a pullback into the 10 or the 20 EMA. Now this is going to continue up, so right now it would probably be in that 50 to 61% range. So that would be a buy area potentially, assuming this candle doesn't continue up or the next candle doesn't continue up. Well, let's look at it in comparison to the Bollinger Band so you can get an idea of how Fibonacci works with them. You can see the 70, let's see if we can zoom in on this. You can see the 78% retracement is actually, as this moves up, probably going to be around the mean. And your 61% retracement is at the 1 ATR. Again, these are buy areas not only on Fibonacci, but also on the Bollinger Bands that I use to trade. And what you're really wanting is a pullback off of this 3 ATR move. As a swing trader, there's just no way I can go long here. plus I'm getting increased momentum down here, increased move to the upside here. I would much rather see this as I look for my long, which this would have been a perfect long as it pulled back into this one ATR move. You could have went long here. You might have tried to wait, but in this case, you would have had to have taken this one in order to get this move. And let's look at it from the wave standpoint. The wave's going to continue to move up, so probably you're going to be at at least the 70, we'll zoom in, at least the 78% retracement before this wave catches up. Probably more likely the 61, because I would expect this to pull back, consolidate, and this to continue to move up. So really, if I look into the future, this is going to catch up around the 50% range if I was a betting person, and which I'm not. I try to play probabilities, but if I were a betting person, the wave's going to probably catch up in the 50% range if this consolidates and pulls back a little bit. And of course, the Fibonacci retracement can change depending on what today's candle finishes at and what tomorrow's candle looks like in the next day. And you may even get another Fib retracement that you would put in. And there's some other ways you could run Fibonacci levels to check and see where your likely pullback areas are, which I haven't really gotten into yet, so I won't throw those at you today. But I think the biggest key that you can see and the biggest thing to take from this is, as a swing trader, you don't want to go long here. You may still have some day trading opportunities as this candle goes up and down, but you're certainly not going to want to go long. And you may have some day trading opportunities tomorrow depending on how volatile the market is and how much volume there is heading into Thanksgiving. If you like this video, please like and subscribe. Please let me know if you have any questions, and thank you for watching. Bye.